Welcome back to the channel. Today we are breaking down a major development in the crypto space, centered around Near Protocol, which is currently trading around the $2.84 level after briefly pushing above $3. This price movement has caught the attention of many traders and analysts because it reflects not just short-term volatility, but also a broader wave of momentum building across the crypto market. At the same time, there is a growing belief that this movement is not happening in isolation. Instead, it may be connected to a much larger transformation taking place across global technology markets, especially driven by the rapid expansion of artificial intelligence.
This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. Over the past year, AI has shifted from being viewed as a temporary hype cycle into something far more structural and long-lasting. Major players like OpenAI, Anthropic, and Google DeepMind are accelerating development at an unprecedented pace, and this has created a surge in demand for computational power, data infrastructure, and scalable systems. In many cases, demand is already exceeding supply, which is a key signal that we are not in a typical speculative bubble. Instead, what we are witnessing is a phase of price discovery, where markets are still trying to properly evaluate the real, long-term value of AI-driven infrastructure and the ecosystems that support it. Within this environment, blockchain networks such as Near Protocol are gaining renewed attention. Near is often highlighted for its focus on scalability, fast transaction processing, and its emphasis on developer-friendly architecture. Beyond that, the network has also been exploring advanced features such as privacy enhancements and cross-chain interoperability, which are becoming increasingly important in a multi-chain crypto world. As a result, some analysts are closely watching Near's ecosystem growth, especially metrics like network activity, transaction volume, and total value locked. These indicators are being interpreted by some as evidence that real usage is beginning to grow, rather than price movement being driven purely by speculation. A major topic of discussion in the broader crypto ecosystem is how blockchain projects actually create long-term value. In earlier market cycles, many tokens experienced rapid price increases based mostly on hype, narrative strength, and user growth, without having strong mechanisms to convert that activity into sustainable value for token holders. However, the current cycle appears to be shifting toward more mature economic models. There is increasing focus on fee generation, real revenue within ecosystems, and whether that revenue is being redistributed back into the network through mechanisms such as buybacks, staking rewards, or ecosystem incentive programs. This shift represents a more fundamental evolution in how investors evaluate blockchain projects. Because of this change in mindset, different blockchain platforms are now being compared more critically based on their economic design. Some networks prioritize attracting users and developers first, offering heavy incentives in early stages, while others are trying to build more sustainable long-term models where usage naturally translates into value accrual. This debate has become central to how investors decide which ecosystems may dominate future market cycles. The projects that successfully align network activity with token value are increasingly seen as the ones most likely to survive and thrive over the long term. At the same time, broader financial markets are reinforcing this trend. Large-cap technology stocks, especially those tied to artificial intelligence, have seen strong performance, suggesting that innovation cycles can drive extended periods of growth rather than short-lived speculative spikes. This perspective is also influencing how crypto markets are being analyzed. Instead of expecting uniform altcoin seasons, where all tokens rise together, many analysts now believe future rallies will be more selective, with capital flowing only into ecosystems that demonstrate strong fundamentals and real-world adoption. However, despite the optimism, risks remain significant. Many blockchain projects still enter the market with strong narratives but struggle to maintain long-term demand. Common challenges include token unlock pressure, large allocations held by venture capital firms, and weak organic usage after initial hype fades. These factors have historically created downward pressure on prices once early excitement cools off, especially when real-world adoption does not match expectations. Because of this, caution remains a critical part of any analysis in the current environment. As a result, the market is increasingly being viewed as a selective environment where only a few strong ecosystems are likely to outperform over time. Rather than broad-based rallies across all digital assets, the trend may shift toward narrative-driven growth phases where only specific sectors or platforms attract meaningful capital inflows. In this kind of environment, fundamentals such as developer activity, user engagement, infrastructure quality, and real economic demand become far more important than hype alone. Within this selective landscape, Near Protocol continues to be positioned as one of the ecosystems attempting to align itself with real usage and long-term infrastructure growth. Its future performance will likely depend on whether it can sustain developer interest, expand its ecosystem applications, and successfully convert network activity into lasting economic value. If these conditions are met, Near could remain a key player in the next phase of blockchain evolution. If not, it may struggle like many other projects that fail to transition from narrative-driven growth to real adoption. To conclude, the current market environment is best described as a phase of discovery rather than certainty. Both crypto and traditional tech sectors are being reshaped by the rise of artificial intelligence and changing investor expectations around value creation. In this uncertain but opportunity-rich landscape, projects like Near Protocol are being carefully evaluated, not just on price action, but on real-world utility, adoption trends, and long-term sustainability. Ultimately, the next major winners in this cycle will likely be those ecosystems that successfully connect innovation with consistent usage, and only time will reveal which networks are able to maintain that momentum as the market continues to evolve.
Thanks for watching. If you enjoyed this video, make sure to like, subscribe, and turn on notifications so you never miss the next update. See you in the next one.